Welcome back to Explain the Charts. Today's date is October 6th, 2024, and we're diving deep into the GBPUSD market, examining the latest news and current market trends to give you a clear picture of where the pair might be headed. The GBPUSD has been on a roller coaster ride in recent days, with a sharp sell-off on Thursday, October 3rd, following dovish comments from the Bank of England Governor, Andrew Bailey. Bailey's comments suggested a potential for aggressive interest rate cuts, which dampened sterling's outlook and put the GBPUSD under pressure. The US dollar, USD, has been strengthening, fueled by positive US employment figures, leading to a decrease in bets on an aggressive interest rate cut by the Federal Reserve, Fed. This strength has affected other currency pairs, including the Australian dollar to US dollar and euro to US dollar, both of which saw losses. Gold, XAU/USD, also struggled to make gains due to the USD's strength. However, the GBPUSD rebounded slightly in the European session on Friday, after a more cautious tone from the BOE's chief economist, Hu Pil, regarding further policy easing. With the market focus shifting towards U.S. labor market data, the GBPUSD's future direction will depend heavily on the upcoming U.S. employment report, with a stronger-than-expected reading potentially limiting GBP/USD's recovery and a weaker report potentially boosting it. Let's take a look at the chart data to see if we can identify any potential trends, reversals, support and resistance levels, and key price levels to watch. First, let's examine the daily chart, which shows the overall trend of the GBPUSD. On the daily chart, we can see that the GBPUSD has been trending downwards since September 2024, reaching a low of 1.21457 on September 26th. The pair then rallied, reaching a high of 1.22968 on October 9th. However, the GBPUSD has been trading below the 200-period simple moving average, SMA, at 1.3200, which is acting as resistance. This suggests that the GBPUSD may continue to trend downwards in the short term. However, it's important to note that the recent rebound in the European session on Friday could indicate a potential reversal. The GBPUSD has been trading above the 1.3000 level, which is a significant psychological support level. If the GBPUSD can break above the 200-period SMA at 1.3200, it could signal a potential bullish reversal. Let's now switch to the hourly chart, which provides a more detailed look at the GBPUSD's price action. On the hourly chart, we can see that the GBPUSD has been trading in a range between 1.3150 and 1.3250 since Friday, October 4th. The pair has been bouncing between these levels with no clear direction. This range-bound trading suggests that the GBPUSD is consolidating and could be preparing for a breakout. If the GBPUSD breaks above the 1.3250 level, it could signal a potential bullish breakout. On the other hand, if the GBPUSD breaks below the 1.3150 level, it could signal a potential bearish breakout. The hourly chart also shows that the GBPUSD has been trading above the 20-period SMA at 1.3180, which is acting as support. Lastly, let's take a closer look at the 15-minute chart, which highlights the most recent price action and potential volatility. On the 15-minute chart, we can see that the GBPUSD has been trading in a tight range between 1.3270 and 1.3290 since the start of the European session on Friday, October 4th. This narrow range-bound trading suggests that there is a lack of strong momentum and traders are cautious about making any major moves. The 15-minute chart also shows that the GBPUSD is trading above the 20-period SMA at 1.3280, which is acting as support. This suggests that the GBPUSD may be slightly bullish in the short term. However, the lack of volatility and clear direction on the 15-minute chart suggests that the GBPUSD may be consolidating and could be preparing for a breakout in either direction. Traders should be aware of potential breakout levels and be prepared to react accordingly. Let's recap the important price levels we discussed and the conditions that would reinforce their likelihood. On the daily chart, the 200-period SMA at 1.3200 is acting as resistance. If the GBPUSD can break above this level, it could signal a potential bullish reversal. However, the pair has been trading below the 200-period SMA, suggesting a possible continuation of the downward trend. The 1.3000 level is a significant psychological support level for the GBPUSD. If the pair breaks below this level, it could signal a potential bearish breakout. On the hourly chart, the range between 1.3150 and 1.3250 is a key area to watch. A breakout above 1.3250 could signal a potential bullish breakout, while a breakout below 1.3150 could signal a bearish breakout. The 20-period SMA at 1.3180 is acting as support on the hourly chart. Finally, on the 15-minute chart, the range between 1.3270 and 1.3290 is the most recent area of consolidation. The 20-period SMA at 1.3280 is acting as support. While it's hard to predict the GBPUSD's future direction with certainty, the recent news and chart data suggest that the pair may be consolidating before making a breakout in either direction. Keep an eye on the key price levels we discussed and the upcoming U.S. employment report, as these factors could significantly influence the GBPUSD's future movement. Happy trading! Remember, always use risk management and trade responsibly.